Payments across the continent, evolution in making. This session will give you an insight on the latest developments of the payments ecosystem in Africa and the evolution of fintech and mobile payments. Please welcome our moderator, Andrea Badiola Mateos, the Chief Commercial Officer at Finance Magnates Group, who will introduce her panel. Andrea, welcome.
Thank you, Elisa. Welcome, everyone. Thank you so much for joining us for a very exciting panel. We're joined here by a whole panel of experts in payments, particularly payments in Africa. I think it's a very hot topic. Fintech is evolving every day more, and we're going to have a very interesting discussion. So first thing I'm going to do is, instead of introducing myself to the panelists, since they can do it no better than themselves, can you guys introduce one by one yourselves? Maybe Nimrod, we can start with you.
Yes.
Yeah.
Hello, everyone. I'm Nimrod. I'm CEO of Zotapay. Thank you for inviting me. Pleasure to be here.
Good morning.
It's on.
It's on.
Yes.
Good afternoon, everyone. My name is Catherine Muya. I'm here with the ABSA Group, and I'm a transactional banker by heart. I look after digital payments in the Pan-Africa business, and actually spend most of my days trying to solve customer problems. So thanks for having us.
Thank you.
Hi. My name is Gillis. I'm from the Standard Bank Group. And my role is a sort of twofold role. It's one, Africa Regions Payments for the Standard Bank Group, and then the remittance strategy that we are pursuing for the group as well.
Thank you. So we're going to open the discussion with a warm-up. Let's talk a little bit about the trends that you're seeing in Africa in general and in the payments ecosystem for 2023. Where do you see the trends going? Who wants to start?
I can start, no problem.
Nimrod?
Sure. So I think that the main trend is definitely the usage of mobile phones in order to make digital payments. We can see the mobile phone usage constantly increasing in the emerging markets, especially in Africa, where you also have the mobile money spread across the continent. Although there is still some gaps between the efficiency, I would say, in between the usage of mobile phone and alternative payment methods to card schemes, such as maybe a transaction speed, the usage of a POS, for example, if you want to pay on spot, so it's not quite there. However, it's constantly increasing. Also very important to know that population in the emerging market is very young, so their first way to make digital payments actually was through their phone, not through a card. Okay, like let's say my generation and so on. Making card payments outside of Europe, USA, and more westernized places, let's say like maybe Japan, Korea, are very expensive. The entire ecosystem of that is super expensive to pay with card. So that's also gonna reduce the usage of card payments. And lastly, there is also the launch of the $25 cost smartphone by Android. So I think having a smartphone so cheap, you can definitely expect the usage to increase.
Mm-hmm. Thank you, Nimrod. Catherine, what's your take on it?
So I'll speak about the trend from a customer perspective. So my day job essentially entails managing customers' ability to have end-to-end view of their liquidity, what they're receiving from their customers, from their suppliers or customers, what they're paying out. And so one of the trends that we're seeing from a business customer, or especially on your large corporate side, is the need for them to be able to do payments a lot faster. So direct integration into their line of business. So what that means is that the more invisible payments is, the better it is for them. So we go into the environment of the customer, and when they're paying out an invoice, they're able to originate a transaction from their own internal systems. We as a bank have integrated into them, and they'll be able to initiate transactions. So what that is referring to is essentially the open banking trend, which is essentially talking about the use of API in the payment space, and that's actually become quite a huge. There's a huge demand in that, and by extension, when we think about the consumer, the retail side of things, the use of API payments, not just payments, but also in lending, in credit scoring, integrating with fintechs in terms of being able to help them acquire new customers, and us as a bank being able to provide those services by extension is something that's emerging. And the final trend that I've also observed quite recently is the emergence of instant payments or rapid payments as well. And that is because of the need and the high demand for speed and transparency and affordability of transactions.
Yes, Brad.
I would say fast, furious, innovative, but cluttered. Everyone wants to be in payments. Everyone feels that that's where the margins are, that's where the opportunity lies, and you will see many, many, many fintechs that have exposed or become part of the African continent. I agree with you. The African continent's leapfrogged traditional card, traditional payments. There are new payment mechanisms out there, new payment providers that we don't even consider that compete with Visa and MasterCard. But the one thing that still holds itself as a dominant form factor is cash is not still going anywhere. It is still stubborn. And so you've got this lovely wave and you've got the stubbornness of cash, which is still the biggest payments form factor, certainly by volume.
Very interesting takes. We have been witnessing very big banking crisis since March 2023 that started in the US, and it has been kind of spreading around the world because we're in a very international system. So it has been affecting a lot of different regions, countries, etc. What is your interpretation of where this is going and the role that the payments ecosystem and the institutions are playing in this? Maybe Brad, since you want to start with it?
Pick on me. Pick on Absa.
Oh, she's next, don't worry.
Yeah, I'm not sure. So the relationship, obviously it's around risk, it's around regulation, and it's about banks probably not being fully assessed around the risk and taken certain positions and exposed their own business models. The reality is that's probably going to introduce more regulation and more friction and more compliance. And when we compare that to the fintechs are always going to be the agile alternative. The imperative will be, though, to remain compliant and to shore up on that, because ultimately someone's paying for when a bank goes down. And it's probably not the executive, it's probably the shareholders and the people who bank with that bank. So I think there's going to be that, as they did in 2008. And I think that it will have a hindrance, but at the same time, it's probably going to be necessary, and we've got to just work out how to be more innovative around that. We're lucky, digital and the new world of technology has really created opportunity, which some of those risk measures, I think, could probably be managed in a far more effective way because we have the digital know-how and the technological know-how to do it. But it is going to be a challenge, particularly because banks are so heavily regulated and they have lots of regulation, 200-300 pieces of legislation they have to comply with, which makes them that much harder for them to be the agile competitor to other would-be suppliers that are non-banks.
Mm-hmm. Yes, Catherine?
Yeah, I think I've got to agree with Brad. And I think the only one other thing I would probably add is, we as the banks need to be more accountable to the services we provide, the ability to protect our consumer base. But for me, I think the one thing that I did pick up on from coming out of this crisis is essentially the need for the banks to be a lot more diversified in terms of their customer base, their value proposition, less concentration risk, especially when we talk about the balance sheet risk and the vulnerabilities that come with it. So that could essentially be mitigated through reducing the concentration risk in terms of areas of focus. I think the other more important aspect is being able to adopt the digital technology that allows us to be a lot more transparent in the way we do things, to be able to empower our customers to be able to protect themselves, to be able to forecast a lot more accurately about scenarios, and being able to mitigate those in advance. So that's one thing I would add to that. Thanks.
Mm-hmm. Yes, Nimrod.
Yeah, I'm very happy to be hearing those answers from the bank representatives. I think what happened in this bank crisis is definitely like some sort of a wake-up call for the banks in terms of maybe changing their approach, maybe do things differently, because I think we're in some kind of a crossroads of the refocus of trust towards the banks. I mean, the trust can go towards different places. Maybe if Apple or Google decides to suddenly become like a digital bank, that can be it will be a great competition for the banks. So this is why also I liked what Catherine said. I think there should be more cooperation, more collaboration between all of the parts in the fintech ecosystem. So, for example, Zotapay being a technology provider, being a multi-regulated company, and still when we come to the banks and we want to open accounts, we want to integrate the methods, we want to collaborate, we're not always so welcome, despite us having all of the compliance, all of the regulations. It's not always goes so easy. So I think we need to collaborate more, all of the parts in the financial ecosystem. I think this is where it lies. We need to change. Approach needs to be changed.
I've heard from all of you the mention of how this is going to become into, or how it is going to evolve into a stronger regulation, but the banks are already institutions highly regulated, and still this happened. So we have mentioned the trend of open banking. Catherine, you touched upon that. I'm wondering, how do you see these two ideas married together, considering that obviously because of this experience we will have to include more regulation into banking and how the operations are run, etc. But we're also pushing, there's a trend for this open banking. Isn't that contradictory in its essence? What do you think about, maybe Catherine, since you opened open banking, you wanna start?
Thanks for throwing me under the bus.
Who's next?
I think it's complementary, actually, rather than a conflicting position, because when we're coming out of the COVID pandemic, where we saw a significant acceleration of digital adoption, and that does not, the fact that we're seeing a lot of fraud, a lot of security breaches in systems, vulnerabilities in the way the financial systems are being exposed. I think it's not by accident, and what it requires is for us as institutions to also step up. So we know very well that as we're trying to innovate and improve on the way we do, we introduce efficiencies in the way we introduce transparency and speed. There's also another part of the world that is also trying to work very hard at breaking into the very same systems that we're trying to introduce, and trying very hard to understand the kind of technology we're putting out there. So the one thing that's quite important is that even as we consider ease of integrating with the banks, and the fact that the banks are looking at federating their services and providing utility services for the likes of the fintechs and other potential partners to use, we've also got to consider the API aspects of that. So for instance, being able to provide API services in fraud management, in fraud identification, in credit scoring, and all that. So KYC controls, you can have an API experience in that respect. So they are actually complementary, but we've always got to take it to cognizance that those have to be fully tested. We've got to be fully trusted. We've got to collaborate quite well with our customers at the end of the day to ensure some level of adoption and utilization before we put them out there. And then I'll hand off to Brad.
Go on, Brad.
I think it's challenging. When I was listening to Catherine, my own thoughts are exactly in agreement with yours, the reality is it's here, right? Open banking's here. Open payments is here. It's being done, and if we're not stepping up to the plate to, one, give the trust through the risk measures and the controls, it's going to happen around us. And it happens already. In the payment space, there is a lot that moves beyond the banks and around the banks. Yes, they'll tackle this, they'll get to the store of value. Or they'll go to the MNOs, they'll create their own store of value and just use a bank for the escrow piece. It's going to happen. We need to be able to balance both. We need to be able to do it efficiently. You've got to use the technology. It is just the way the business is. The thing that the banks are going to have to manage is that they do need to be faster. It can't take as long as it does, because that's why we've got all the competitors that are non-banks in place. And it is incumbent on us to be that, but the trusted partner, but also the one that's offering the sort of future-ready services and experience.
Yeah, Nimrod.
Yes, so when we just started penetrating the African market and to come into South Africa, and I learned about the instant EFT and such, I was amazed, and I'm still amazed by this technology. I think it's incredible way of payment. Among the alternative payment methods which we are familiar with and we are working all across the globe, it's definitely one of my the ones I most appreciate and favor. It still has some problems. We need to say that out loud. Like for instance, I think API is not completely there. Like, let's say, for instance, you get a recall for an EFT transaction and you cannot get the update from the bank, and you need to wait that they will inform you about that. And unfortunately, there are some fraudsters and people that are aware of that and they are taking advantage of that. Transaction speed, which you mentioned. However, it's an incredible technology here in South Africa, and we have the mobile money all across Africa. So I think, from my point of view, if you look at it, Africa in some way is way, way ahead. I mean, in some sort of skipping the card schemes, skipping SWIFT. Now there is excellent open banking system. There is amazing mobile money system. It's fully digitalized. So in some ways, I think Africa is ahead. Just need a bit more improvements, need to put a lot of attention into it. And the potential is enormous. I think Africa, yes, the future is bright here, I think, yes.
Do you all agree?
I think we're ahead, but we're not there yet. And I think there's pockets of excellence. To your point, Nimrod, I think we've seen the emergence of, for instance, the adoption of the mobile wallet has been exponential, particularly in East Africa, with Kenya taking the lead there. But we're also seeing in other markets the alternatives, for instance, around the adoption of scan and pay, and just recent pay now, pay now, pay later. Buy now, pay later is just recently picking up, and we're actually seeing a huge excitement and pickup from a South Africa perspective. And so there are pockets of excellence. We still see a huge use of cash. It's not going to go away, to be fairly honest. And the message that I take from that is, we've got to constantly keep talking to the target demographics, trying to understand why is it they still lean towards a semi-digital experience to a certain extent. Some have legitimate reasons for doing that. Others do not. And that talks to infrastructure. It talks to the fact that to a certain extent, the banks cannot be everything to everyone. And that's where partnerships is quite integral in this conversation. And in having partnerships with a lot of fintechs that are on the ground solving real problem statements around the last mile, as an example, that's where we start to see the real value. So Nimrod, thanks for the vote of confidence for Africa, but the journey still continues.
Brad, do you want to add something?
I'm in the
to
same
it?
boat as Catherine. The word pockets is a big word for me, because that's exactly what you see across the continent. It's pockets of excellence, but it isn't ubiquitous. There are 50, how many countries? 54, I don't know, I forget. It depends on how you count them. But there are a lot of countries. It's not a country, right? It is a lot of countries. And so it's fragmented by jurisdiction. It's fragmented in terms of regulation. And it's fragmented by the payment systems as well. No, I don't see a lot of the fintechs giving themselves the sort of complete spread across the whole of the continent. So then the challenge we've got is making that a consolidated payment environment, so that when you're wanting your next Netflix subscription, you can be anywhere in the continent and you can actually subscribe to Netflix, and Netflix goes to one place to do one collection wherever you are across the continent. That's not happening yet. It is still a long way off, but we do have momentum, and there is a lot where you can galvanize this and achieve that. And that then also translates into why people stay in cash, because it is still the most accepted payment form. In fact, if you can give purpose to your store of value or your money that you use to transact, people will keep their money in their account, and then it'll be attractive to the digital world, particularly the ones that want to enter Africa in a very practical but holistic way.
Thank you all for very insightful answers. I want to pick up a little bit on the compliance and regulation comments that we made before, because all this trend of open banking and the evolution that technology needs to have in order for all of payments and banks to be better adjusted and just get better, right? All of these is going to cost a lot of money. And as of now, regulation and compliance can amount for up to 60% of the cost of a transaction, right? So where is that going to stop? And if we need better technology, is it going to be more than 60%? Can it be capped? Like, what are your takes on it? Nimrod, this time you start.
Yeah, and I will also I will continue what Brad said, because I think this is one of the places where the solution lies. And you've mentioned like that Africa is being separated and not so unified. So, for example, in South Africa, we are, for example, are using a TPPP regulation. But if you go to West Africa, so it's a completely different story, right? So we are going to Cameroon and we're opening an entity, and then we're going to Ivory Coast and we're opening an entity. Currencies are almost identical, has the same value, but still, we need to do different regulation there, different compliance process there, different company there, different regulation. Why? It's everything. If everything will be a little bit more together, a little bit more unified. If Africa will slowly learn to work as one and not to, because it's so separated by country-wise right now, I think it will make everything more cost-efficient, generally efficient, and it will empower the entire continent also in this aspect.
Catherine, yeah.
Comfortable to go right after you, and I'll leave the rest to Brad. But I think just leaning back to what Brad actually mentioned, it's not one country, right? So you're dealing with 54 regulators. If that's the number of countries we're dealing with, 54 regulators. In my space, I'm dealing with at least 10 markets where we're actively taking deposits. And to be able to do that, you've got to be able to promote payment solutions that make sense and are relevant to those markets. we've got to also be able to monitor and manage fraud and protect our customer base. That's our responsibility. It comes as a cost. There's inefficiencies, not necessarily always on the bank side, but also on the downstream. There's breakage and friction in the way we settle, in the way you expect to receive feedback on a transaction. So for instance, in the lag time you see in an API response could actually be as a result of, number one, could be legacy systems that sit from a bank perspective, or fairly well on the handoff into the clearing, into the clearing world. So we will see, and that's what makes our job that much harder, is that there's a different circumstance in every single market that we're operating in. And that's the job we have to do to be able to try and present this experience as uniform as possible to our end customers and our end partners and so on. And that comes at a cost. So we do take the hit. We do have to a very large extent, adopt a lot of new technology to be able to make that a lot more efficient. Data is at the back of that, using data and analytics to be able to inform where we need to fix and improve and promote efficiencies, especially in the turnaround of payments. That's also quite crucial. And the adoption of other technologies, immersive technologies, AI, to manage a lot of mundane tasks so that we free up the banker to focus more on meeting the customer needs, having more meaningful conversations around innovation and taking us to the next level. The cost of transacting is still significantly high because we have not necessarily unified in our payment regimes. Yes, we've also got pockets, East African community, like in East African payment systems. We've got a COMESA corridor, for instance, where we are trying to promote some level of uniformity in the way we clear high-value payments, as an example. But ultimately, there's also a scream for help. They're saying in every one of those countries, there's a different currency. There's a cross-border payment requirement. I want to trade Ghana and Kenya. Why do I have to trade in US dollars? Banks, sort that out. They're saying, can't you figure out a way for you to just trade directly between the cedi and the Kenya shilling? Please solve that problem. So this is the complexity that comes with our ability to do business in a Pan-Africa perspective. But again, I keep emphasizing, we need our partnerships, relationships to pick up and to work closely with us to be able to get this done.
Thank you, Catherine. Brad, what's your opinion?
It's an opportunity. Without taking away from the importance of what regulation does and the compliance to the regulation, to the panel's point, it is super complex, super frustrating, but a great opportunity if we can get it right. So what does that mean? It means we must look at, and someone's going to do it, and when they've unlocked this, because it will happen. There's no doubt in 5 years' time, it will not be as big a problem as it is now. But someone will unlock it. And it is the technology element that I think will succeed. Whether it's a blockchain solution or something that we really haven't yet mastered to from a sort of tipping point of view, that's where I think it'll come in. And the organization that gets it right will literally win. And it is that opportunity that I think we should rather look at it from a positive point of view to find the solution. And it's a lot of how we think. So I'm in a bank. A lot of our compliance is around, here's the law, this is how you apply it. Rather than, here's the law, and without, again, compromising, taking it and turning it into an opportunity. Look at a risk type assessment. Don't take the sledgehammer to the chestnut. Deal with the chestnut, because it may not need all the regulation and it may still not expose you and put you under undue risk. But we're inclined to overcompensate. So not only is the regulation in place, but we overcompensate on how we enforce that regulation or comply with that regulation. So we'll KYC you for our home loan when actually the person just wanted to send $100 cross-border. Is that necessary? So those are the things we've got to look at. Our own approach, but also what technology, and I know we've said tech a lot, but there are elements that I think will come about and the opportunity will be seized and we'll see it becoming a success and the organization that does it will be the winner.
Thank you. We've talked about partnerships and fintech and the need of all of these actors to be more involved in Africa in particular. Let's talk a little bit about the fintech space in Africa. So we had Visa having the acquiring Tink for a few $1 million. We had MasterCard also investing in Artel. So where do you see the fintech space going? Is this the right direction? Is it picking up? Does it need more wave? I mean, Zotapay probably can be a witness of all of this since they are now in South Africa. What do you think?
Yeah, so I can definitely understand whomever it is that is choosing to invest in fintech in Africa, in South Africa in particular. I'm a big believer in this continent, also in South Africa as a country. I said already what I think about the EFT and the payment system here. Speaking about the ones that you mentioned, I was more impressed by MasterCard's decision to invest in mobile money infrastructure. I think it was a very smart move of them to do so, because mobile money is actually great. This is the most popular payment method in the continent. Yes, so it's I can understand them totally. I mean, this is what we are doing. You know, we are as a fintech company who want to empower global economy and connect the emerging market to international companies. We're integrating everything that we can here, mobile money, open banking, whatever it is that we need to do in order to enable Africa to the rest of the world.
Mm-hmm. Catherine, do you think it needs a bigger push? Do you think that the partners are up to the task? Is there a need for more partners? Is there too many partners coming at the same time? What's your perception?
Yeah. This is a tricky one. So it's a yes and a no. So we see the proliferation of a lot of fintechs in the space. And to be fairly honest, it's been an eye-opener for the banks. And what it's done, it's presented an opportunity for us to look at things very differently, to look at the way we solve problems. But it's also made us become very real about the kind of problems we choose to solve versus those that we choose to partner in order to solve for. But it all boils down to essentially solving problems from an ecosystem perspective. So when you're looking at an end-to-end, maybe the vertical from an ecosystem play perspective, what you want to look at is where your strengths are at. So the fintech between the fintech and the banks, I see a symbiotic relationship. We've got strengths that they look for. We've been operating for, especially in our world, in ABSA, it's almost 100 years in the continent. That's a lot of history. That's team members or staff members with a lot of context. There's experience, there's client management that's in there. There's an appreciation of what it means to navigate a highly regulated environment. Then we see the benefit of coming in with a fintech who essentially are solving for that problem statement or that use case to the T. And so I see this as a relationship or a dynamic that is here to stay, if not grow. Given sometimes we do feel overwhelmed when fintechs knock on our doors. They've got amazing ideas, and we've got to come up with frameworks that allow us to be able to make the right decision in terms of who we partner with. And it's quite interesting because I see a lot more partnerships play rather than acquisitions, as an example. But nonetheless, I think that relationship is here to stay.
Mm-hmm. Brad?
Yeah, symbiotic is the word that I picked up on, and I think it's right. We have to accept that 100 years or 150, I forget where we are, that it's a big institution. It's got real solid foundation. It's highly trusted, and that's what the organization is about. But that agility often gets presented to us by the fintech environment. They have that. They've fairly targeted on what they want to achieve, so they don't have to manage many balls. And so that symbiotic relationship is key. Getting cultural fit is always a challenge. It exists, they're agile, they need to be given the freedom, they need, they need capital, but they also need to be able to be respectful of the fact that there is a regulatory environment behind that, and often if it's the bank who's investing or partnering, they've got their name on the line here as well. But finding that balance between freedom to really explore and innovate, and being that salt of the earth, we've got to keep it robust. And the cultural differences, very important to manage. And that is probably the single biggest issue, is to make sure that you give the freedom and keep the cultural elements in mind, so that you don't stifle that freedom and that spirit that they have.
Mm-hmm. Yeah, I imagine it's not easy because, from our end, from Finance Magnates, for example, we cover the news in 4 verticals: payments, fintech, electronic trading, and digital assets. And we see actors popping up on a daily basis. So we're covering the news of the launches and the acquisitions and the mergers and the partnerships. And we see a trend of banks, like the payments industry, let's say, or the banking industry, they're kind of fusing. And we see that banks really want to, what you're both saying, right? That banks really want to find the right partners for these, instead of acquiring, which is maybe a bit more of a traditional method of going into it. So finding somebody that is already with a ready-made solution to the T, like you're saying, right? And just incorporating it into the process. But they have a very different culture because they come from the startup culture. So I totally get what you're saying, because we're witnessing this on a daily basis. And I think that it's a challenge, but it's definitely a big opportunity for the world in general. And I want to link that to the fact that Bankrate, for example, ran a survey, and they found out that in Africa, 60% of the population is willing to go digital-only banking. So, you've both said from ground knowledge that cash is not going anywhere, right? But how do you see, is this a growth? Is it more than it was? Do you see that digital banking can eventually, let's say in 5 years' time, become the go-to? What kind of challenges and what kind of opportunities can these pose for you banks and for payment institutions? Catherine.
Wow, I get picked on a lot.
I have to pick one.
So it is a loaded question. I would boil it down to, when we talk about neobanks, because I think you're referring to digital-only banks, and I use quotes. It goes back to my earlier statement about not being everything for everyone. So neobanks has its place, and I would reconnect it to addressing the demographics that would essentially promote neobanking. And it's, Africa is considered a very young continent. And when we look at the evolution of the youth, those are the future CEOs in their 20s. So they have a huge drive towards the whole neobanking movement. But when we still consider the dynamics of the fact that we're still heavily cash intensive, I find that we will, in the immediate future or the near term, we'll still need to contend with a hybrid offering. And that even if you do introduce a neobank and it has its target demographic group that will adopt it, you still have other requirements around being able to do cash acceptance, being able to lend, and being able to have a human conversation and human connection in order to make decisions. And that's something that, as a bank and financial institution, we also need to start recognizing in terms of the evolution of human relationships, and being able to still maintain a a credible business, a safe business, and keeping our customers safe in the process. So there's a lot to balance in the question around neobanking in terms of being 100% meeting the requirements of our customer. Mm-hmm. Brad, what do you think?
I was thinking last mile, first mile, you're probably going to have to deal that. If that can become digital, which it's not going to happen anytime soon, then you can say, well, then it's going to be a digital-only world. Right now, that last mile and first mile is still very physical. And particularly when it comes to the volume, the payment volumes, So that hybrid is probably where you want it. And you've got to say, we do research after research about what is the customer experience they're looking for, and there is this attachment to visibility, and almost it's a visible and tactile that you know is still required for people to feel that they belong, and that's going to take some time to change, and so I think it's the hybrid model. I agree.
Mm-hmm. Nimrod.
I really liked what Catherine said. I think eventually it should be some kind of an hybrid way of work. Like, from one end we want efficiency, we want things to be fast, but from the other end we don't want to be talking to robots all day and get automated replies. So I think it lies somewhere in the middle. I would also like to look at it on another perspective. So we, as an example, having offices in several places in the world, including in Africa, the employees which we bring, we educate them and we let them go through some kind of study program and qualification program, and then they get qualified to work in the fintech vertical. They work in global fintech companies such as Zotapay. And I think it's also important to look at that in that sense that people need jobs, and the evolution of fintech in Africa need to give opportunities also to the people in Africa. And if we will digitalize everything and everything will be machine and everything, it will come on the expense of people getting more jobs, being more educated, getting more opportunities to develop. And I think eventually it's not a positive thing. So we need the humans there. We need the interpersonal relationships. We believe in both. I mean, we believe in a very efficient and the most high-level technology, but also in the most high-level human relationship and all the values that come with that, compassion and leadership and togetherness. So I think those things are still important.
Thank you very much, all three of you. We have run out of time, so I'm going to ask if we have time for like one question at least from the audience. Yeah? One. Okay. There is one right here, please.
Hi, everybody. My name is Andrea Perez, co-founder of Fintech Association of South Africa. So South Africa is going through a massive transformation with the PIB, coffee bill, everything. Open banking is one of the big topics that is coming. We saw the launch of Capitec Pay, which in essence is not real open banking. I have my own personal opinions about Capitec Pay, but what is your view on open APIs towards fintechs, towards payment gateways that will minimize the risk of fraud, transactions at risk, etc.?
The question is addressed to anybody in particular? Brad and Catherine, I think they're targeting you.
So was your question? Obviously, we've got instant payments, and you're talking about the fact that there is. No, it doesn't actually. You're talking about the open API scenario with regards to what is our view on that, and others want. Say again. Still not getting the question.
Can we get him a microphone, please?
My question is around open APIs and open banking, and if the likes of ABSA or Standard Bank are looking to open their APIs more to fintechs.
Oh, no, we've got so it's one of our primary, we've structured ourselves around, we call them domains. One of the primary domains is open banking and API presentment, commercialization and presentment to the market. So it's very much, but it's got to be done because, again, organizationally, there is an element of fear that comes with that because you're opening it up, right? One, from a regulatory point of view, but two, because is that revenue going to go elsewhere? But the point is, the revenue is going to go elsewhere anyway, or the business is going to go elsewhere anyway. So there is a real effort and an intent. In fact, there are already APIs that are at the sort of go-to-market level to be able to enable that. I mean, there's very typically the sort of EFT direct payments, if you like, the real-time payments, but the ones that are operating at an EFT level. I don't want to use the right words or the words that we use at the bank, but those things are, they're real, they exist. We can't undo that, so we have to embrace it. And so we've got the teams that are working on these to give us and to give the market the access that they're after.
Catherine from
Do
Upset.
you need a response?
Yeah. It's on.
You can hear me, right? So, yeah, so we have to contend with open banking. It's a reality. I 100% agree with Brad. There is going to be the need for the banks to be creative about how they adopt that technology to meet and solve bigger and better problems for our customer base. In terms of the stage where we're at, so you will find that across Africa, we're at different stages of adoption. We also have fintechs to thank for that in terms of how quickly they've allowed us to accelerate the adoption and the acceptability of the whole open API economy movement. I think you did mention something to do with fraud. So in the same way that we've adopted those experiences, we have had to embed fraud checks and security inside the customer journey. So rather than trying to do it before or after, you're essentially trying to embed it as part and parcel of the transaction. So the customer may not necessarily see it, the fintech may not necessarily see it, but we have that responsibility to be able to surface that. In some cases, it's not API ready, in some cases, in others it is. So the API economy and from an API payments experience, that's something we have to embrace 100% with different pockets of adoption. Scale is big. We're starting to see that it's not only from a fintech perspective, we're starting to see corporates changing the way they do businesses. So they're not asking for online banking. They're saying, give me an API I can consume so that I no longer have to log into multiple platforms in order to do the business of the day. So essentially, we integrate into their ERP systems or treasury management systems, as an example, and they're able to initiate and make payments, pay their salaries, without actually having to see an online page that belongs to AppSap, for instance. That's the direction the customers are going. And we're listening, and we're trying to pay a lot more attention in terms of other ways in which we can make payments more invisible for them.
I think that answers your question, yeah? Thank you very much. Unfortunately, we don't have times. I'm not sure we have time for more questions. Yeah? Elisa, it's okay? Yeah? Okay. Yeah, she said yeah. Can he ask the question? Do we have 2 minutes for it?
Hi everyone. So with the use of research, a few reliable sources state that Russia, China, and a few other countries are shying away from the use of the US dollar, which is likely going to cause a dollar collapse in the near future. And rumors are that the goal for the future is to create a one world currency, which is apparently going to have to be used by all countries. So how does the future of banks like Absa and Standard Bank look like?
Okay, so currency, is the dollar gonna fall?
Okay, so I think the first thing that I'll state, and my employer will be comfortable with that, is that I don't respond to rumors per se, but we listen to what what's happening out there in terms of the economic dynamics globally. I think very recently we saw a huge shortage of the US dollar across, in Africa. I think particularly we saw that in West Africa. We observed that in East Africa, particularly Kenya. We were dealing with dollar shortages as an example. And there was a lot of frustration around, what are the banks going to do better and more creatively around managing these shortages, other than, being able to proactively report and forecast when it's likely to happen. And to a very large extent, I don't have a 100% answer, but one of the things that I've been paying close attention to is, for instance, the Africa Continental Free Trade Agreement, which is essentially trying to promote a lot more fluidity in the movements of, in terms of trade, the enhancements of cross-border trade, especially intra-continental. But I believe by extension there will be a benefit in terms of intercontinental trade at some point. And essentially, what they're actually promoting is the Pan-African Payment System, Settlement System, which they call PAPS, that is essentially looking at, again, trying to disintermediate the friction caused by the dependencies of hard currencies like the US dollar, as an example. It's still relatively early stages. I think it's about 4-5 years old. Please don't quote me. I think one of the aspirations they have is being able to make a cross-border payments in under 120 seconds. They've been piloting this. They're already doing that in different models. In some cases, they're going directly to banks. In others, they're speaking to regulation in order to start promoting that. And there's other reasons behind, there's other initiatives beyond just the Pan-African payment settlement systems that are speaking around common tariffs or being able to remove the friction at borders, improve the movements between borders, less reducing the pain around cross-border payments and tax issues, and so on and so forth. So I think there's a general appreciation of your problem statement, and the African Union and other players and participants in the continent are essentially trying to solve that one day at a time. So I don't necessarily have a perfect answer for you, but I think if you can watch that space as an example, that would be a good place to start.
I just wanted to say that, yeah, liquidity is always the biggest challenge, and perhaps is one of those efforts to try and negate the dependency on hard currency. The other one that's coming up a lot across all the region, regulators are looking at it, is central bank digital currencies, and whether or not there is merits in that to be an alternative. How that fits together, we'll work it out, but there is a lot of interest across many of the markets from west, east and south. That's inevitable to solve some of the pressures that are brought to bear by the liquidity challenges.
Thank you all. We're going to leave it here. Please, thank you to all of our speakers. Big round of applause.